Hey guys, it's Josh here, the founder of Digital Surge. I'm here with Jeff from getFIFO. He's based in the UK and runs a cryptocurrency exchange. I met him a few weeks ago here in the Gold Coast. Jeff, you're originally from Australia, aren't you?
Yeah, originally from the Gold Coast, born and bred, little tiny place called Pimpama, right between Gold Coast and Brisbane. So come a very, very long way from home since then.
Do you want to tell the viewers a little bit about getFIFO, how you started, what you guys are doing?
Sure. So I moved to the UK in 2010 for very, very stupid reasons. Follow my social media, you're going to see why. We started getFIFO in last year at the height of the bull run in 2017 when a few of my now business partners came to me and said, Jeff, you've been doing this crypto thing a little while. We want to learn and get involved a little bit. We've got a little bit of capital to play with. Can you help us? And after a bottle of wine and kind of 2.5 hours later, it was more of a small education in FX trading and cybersecurity. And the real question that came out of it was, why the hell can't I just buy crypto for pound sterling? Why am I moving it into euros? Why am I moving it to US dollars and then buying an asset and then moving it between multiple exchanges? Why can't I just buy Bitcoin or Ethereum or even Neo or something like that in pounds? And that was a really good question at the time. So we went away and researched. Found that was a very limited market doing it right now, maybe because of the size of the market, I don't know. And that was a good enough reason to at least try and put a business together. And 12 months later, here we are.
I'm surprised that there wasn't or isn't more UK.
Well, there is now. I think when we started out, there were very little. We had Coinbase here in the UK, but you had to swap into US dollars. They've now added pounds to their offering, but it's not that great of a rate, and you can't exit in pounds. You can only exit in euros, so there's still a little bit of lag there. There are a lot of CFD and more trading platforms that use more kind of derivative style products, not really buying the asset and withdrawing the asset. And there are a couple others that do kind of exactly what we do, but they're either super expensive, like I would say £5 to £7 on deposit. Quite large fees in terms of order book and trading. And if you want to go out of fiat, sometimes 20 to 60 pounds of withdrawal fees because they're using a European bank, not a UK bank. It's very, very difficult. We've got a little bit of an edge that way because we've got a CFO that spent 25 years in financial markets. He's already FCA regulated himself. He's actually an ex-client of mine. I set up his FX fund in all the technical sense. And yeah, he's had a lot of that experience in his career. So he's able to kind of bring a huge amount of legitimacy and all his contacts to help us kind of get a little bit of an edge up as a fintech startup.
No, it's very different here in Australia. So a little bit of background about us. I guess you could, if you're familiar with Coinbase, we look and feel similar to Coinbase. So we've kind of gone for the entry point for people to get into crypto. Most of the platforms here, they were built for technical people or the early adopters, or even before the early adopters. And it's quite overwhelming for a new person that's new to crypto. They see,
I agree.
They kind of don't know what's going on.
Yeah.
And the fees are interesting because Coinbase charge Australians 4% to buy crypto, and you can't withdraw. Whereas we don't charge.
You can't withdraw.
Fees. No, you can't. You can withdraw your crypto, but you can't withdraw.
Oh, okay. But back to any sort of fiat. Wow.
You can't actually sell. You can only buy. So that's the issue. You can buy the crypto, but sell you can't.
Yeah.
We officially opened up in late July last year. We were in development for probably 18 months before that, and I guess that was what our point of difference is: just being really simple, really easy to use.
Yeah.
Remove the verification, friction onboarding, and just provide a really good customer experience for new people coming on. And that's what we've seen with people coming to us because they're interested, they've heard about us, and they're just intimidated by the other platforms. So we're probably a little bit different in the way we send the market to you guys, but it's interesting. I find the fees that are being charged over there because there's probably a little bit more competition now in Australia, especially during the ICO period. We had Hubway launch their exchange, which is just like one of their main offering, but there's pretty much no trading volume on there at all. And I think it's Yeah, because there are a few exchanges, so the prices come down with the fees and it's a bit more competitive.
Yeah, I can definitely see it going that way when the market matures a lot more. There are more, even in the UK, there's a lot of platforms for trading that will take on pounds, but you will trade into US dollars. So they've been traditionally a house that was like an FX house previously, and now they've bolted on those pairs because they've got a previous regulation. They could offer, legitimately offer like futures contracts and stuff like that as well. So there are kind of new products coming out around that kind of space, but they're all pegged, like you say, at a more sophisticated trader, someone that wants to trade the asset instead of, I've got £500, I've got £1,000, I want to take an exposure. They want to hold the asset and not just trade a position. And some of the early platforms, they look a bit dog meat. They look a bit too complex to use. Some of the newer ones are getting there, are getting better. And then as soon as you start putting an emphasis on simple and secure, you immediately almost step into the next kind of plateau of that, which is DEXs. And DEXs are a whole nother level of complex because now you're dealing with custody. So it's extremely hard to kind of find that balance between kind of value, security, a bit of custody stuff without kind of stepping on regulation, but obviously still giving value to your end client. And that's when I saw your original platform before we talked the first time. And I can understand the Coinbase-esque, let's just call it that, which is similar to ours as well. You deposit, you buy, sell, and withdraw. Really, really simple with a nice skin over the top. And if you can lick those things, like you said, I mean, we have to have a KYC verification on any kind of fiat services. So we're not able to do, I suppose we could do an offering where we had a withdrawal and deposit, but then you wouldn't be able to do anything else because we've got fiat involved. It's just the UK regulation stuff. We've got really, really strict anti-money laundering. But how do your clients use the platform without a KYC initially?
Well, all our customers need to be KYC. So probably similar to the UK, we've got strict regulations on AML and KYC.
Right.
So people can create an account, but they can't really do anything unless they get verified.
Okay, I understand that. Cool.
So once they're verified, then they can do everything. But if they're not verified, then they can kind of just look around and get a feel for the platform.
Yeah.
That's kind of pretty limited.
Do you find that as soon as you're able to, as soon as some people start using a particular platform, they gain a level of comfort and trust, which I think is the main currency in the sector right now is trust, that they don't tend to go and use other platforms?
Well, I guess this is what we've been looking at is the customers that are using our platform and when they do use it and how often. So we've been seeing an increase in our trade volume. So this month we're looking at probably close to a 50% increase from the previous month.
Wow.
And what we sometimes see is people sign up, they might not do anything for a month or two, and then they'll come back. So, the market obviously has sort of gone down the price. So we're seeing people are starting to buy again now. Yeah. We're seeing first-time buyers, and we're also getting the repeat customers. So, I mean, for us, if we just provide a really good service and the customers are happy with it, they generally do stick to it. I guess it depends on the type of customer. So if they want to, learn more about trading and they want to go down that path, then we would see ourselves at this current stage as a fiat on-ramp. So then they might move points to a larger exchange, which has a lot more volume. Yeah. That's generally where the training and education is done. I mean, I guess that's our vision is to add more coins so people can stay local, then they don't have to worry about work with unregulated exchange, like who are they dealing with somewhere over in Malta or whatever. Yeah.
And I suppose that's with this whole globalization bit, is you can connect and use any platform anywhere in the world. Obviously there's a risk in crypto, it could go to zero, but you've also got the risk of you're on a platform in another jurisdiction where you are nothing but just another number. And this is where some of the quality and some of the support and some of the transparency absolutely falls off a cliff. I've never had to raise a ticket on Binance before, but I have had to raise a ticket on Coinbase, and that was about 8 months ago, and it still hasn't been replied to. And some of these platforms are notorious for their bad support. I mean, while we're still small and agile, like yourselves, we're still less than a year old. We get back to support tickets within 30 minutes to 2 hours max, because those are really, really important to me when they come in. half of them are spam, but ICO services and all that kind of stuff, finding a support email address. But the rest of it, we take every single one of our clients very, very personally. And that's probably one of the most important things I'd like to carry through our growth and through our journey is adding that customer value and keeping it there, because it's just as easy to do really high quality, legitimate business than it is to do a scamming ICO and run off with everyone's money.
Yeah, I mean, I think we follow similar values. Like we really value customer service and helping the customers out. And I mean, one thing that we've tried to do a little bit differently to the other platforms here in Australia, where I see some of them are starting to test it, but we started it from day dot, is our live chat. So we feel that's been quite helpful, because customers just, they might just need a quick confirmation that this might be
it doesn't warrant an email or a wait, even if it comes through a Facebook chat. Any of those systems, there's plenty out there to use that will integrate. But the instant chat thing is really important as well. Having a phone number on your website, people can call you up on the phone and ask a question.
Exactly.
And I still do that for.
We don't have a phone listed at this point, but I mean, people just talk to us in the live chat. We'll call them if we need to. But
exactly.
The thing that now is people just expect things to be instant. So one of the challenges we have in Australia is banking, and it's been a bit of a difficult road for crypto and banking. They generally haven't worked well together. But what we are seeing in Australia is these new neo banks. So they're completely digital online banks, and there's one recently just got their first full license. So those guys, I think, will be interesting to see how they interact with the crypto community. And what's happening in Australia is a thing called fast payment. So generally, bank transfer takes 2 to 3 days, but now they're being sent straight away. So customers expecting their crypto straight away. If they have an issue, they're expecting a response straight away. And these sites that take weeks to get back, people are just not happy with it.
So the age of hyper connected and getting stuff, like Amazon 1-day delivery or whatever it is, and this whole instant stuff, and banking and payments are legacy and archaic almost in some of the ways. One of the bits that's in the UK I did actually a friend laughed when I was in Australia. When I saw you, a friend of mine laughed at me like, "Oh, I need to find a Westpac ATM to get some cash out." I'm like, "Okay, fair enough. Well, there's an ATM over there, a cash point over there." Like, that's Commonwealth. I can't use that. I'm like, "Why not?" Because it doesn't work. It's like, but you can still get what it charges you, right? No, it doesn't work. But in the UK, you can take any card to any ATM anywhere and get money out for free. You don't get charged. So.
I think they've changed that recently. So
really recent? Yeah.
They used to charge you everywhere, but I think one of the banks said we're not charging you, and then you have the cascading effect.
Yeah.
It's all these little ATMs that they sting you.
Yeah, there's ones like you fall out of a pub at 3 a.m. and the only thing open is the corner store with an ATM, and it's like $6 to get your own money out. And I'm like, yeah, do it. But the banking stuff, we have a bunch of those challenger banks coming up now as well. Starling, Monzo, Tide, a whole bunch of those. And not only are the offering and the app really good, it cuts out a lot of waste, which is what when we talk about crypto as a blockchain going forward, it's those type of businesses that cut out all of the waste, which I think those efficiencies coming through with blockchain or new businesses or digital, getting rid of we don't need 200 outlets all over the UK. We don't need all this extra stuff to do business. I mean, Starling raised £3 billion from private equity in their seed round, which is insane, to build this product. And
how much did you say? 3 billion?
Something like that.
Billion. That's crazy.
Yeah.
Wow.
But I mean, it is for a bank. They're going for a banking license as well. I might have it. I haven't researched. But I mean, when I started, well, to me, a lot, not great, same as yourself. So it is, in Europe is way more flexible. Europe is, they're trying to, maybe it's the Brexit thing, I don't know, they've got a lot of stuff on their plate. There's a lot of banks doing a lot more stuff in terms of crypto related businesses. Some of them are literally just doing a cash grab. So there's one called Clearbank. They go, yeah, we'll give you an account, you can segregate, we'll give you an API, you can have a bank code for every single one of your clients, you can have thousands of accounts. It'll only cost you £7,000 a month. Right?
Oh yeah,
that's the deal, yeah. We actually have several Euro accounts, but we're not ready to kind of turn them onto our platform yet because we don't have a presence in Europe just yet. One of the we got the email and we're like, do we really want to use this bank because of its name? And then a few other exchanges are using them now. It's called Mr. Tango, which I thought was a taco stand. But they're actually a very, very legitimate, very big bank in Estonia or Latvia, I believe, which are extremely friendly. Yeah.
Estonia. I mean, I don't know. It's probably just my.
Well, they're the ones that did. Let's say they put a regulation in. It's a very, very light regulation, very easy to work with. But then again, I'm not from that part of the world. I don't know any people there. I don't have contacts there. It'll be all emails, so I don't have any frame of references. If we're getting ripped off, we're getting a good deal. That's why we've never gone there. But it's getting better for the consumer level with these internet style banks that are app only. So you can't even log into the website. It just sends you to the app store. When I started my property business here in the UK, it took me 3 weeks to open an account. I had to go to the branch 3 times to prove that I had to prove I wasn't a hedge fund. I had to prove I wasn't American. I had to prove all of this other stuff just to open an account. Barclays was a little bit better. It took about a week when I started doing contracting consulting. But with the Starling ones, I opened a personal account and a business account and had everything KYC for both entities in like 19 minutes. And I had the bank and I had the account numbers and everything else to use straight away. I got the cards in the mail 2 days later. And I tell everyone I know about using it. I don't get any referral fees whatsoever because it's such a good offering. Revolut's another good one. They're doing some really, really cool stuff in crypto as well. I think they're actually building an exchange. But when I came to,
but they don't deal with Australians yet.
No, but I can do Aussie dollars on it because I didn't in December when we met up from London to America where I did my stopover and then to Australia. I didn't touch cash for the whole month using that Revolut platform, which is really cool. So it's getting there. I think you give it another couple of years. I think those international SWIFT payments and those larger walls in between countries and finance with crypto or without crypto or just using the tech, it will come down. But I think everyone's just really scared of all of the ICO junk, the nicking money, the anti-money laundering, that kind of stuff. The first person to dip their toe and get it right, like you say with the other banking, everyone will fall into place pretty quick because they need to, right? Yeah. In
regards to payments, do you see, like, can you pay with crypto over in the UK?
Slowly. I think Europe is definitely more innovative in the space of the payments. There are niche shops that will take some sort of crypto payment, whether it's Bitcoin or Bcash or whatever it is. They've got a wallet or some sort of POS terminal. It's definitely not as far ahead as something like Hong Kong or parts of Asia, where literally every second restaurant or sushi bar or whatever has some sort of POS that will accept it. There's an article this week I just posted out about a food delivery is very, very big in the UK and Europe. So you order from a restaurant through a third-party platform, a rider will go pick it up and they'll get it to your house within 30 minutes or so. A little bit harder in Australia, just pure geography. Getting something from a restaurant in, I don't know, Slats Creek and delivered down to part of the Gold Coast is not going to happen. But I can get a burger or a steak or something from a restaurant, get to my house in kind of 30 minutes or so through these apps. And there's one in Germany which has got a really long name, which I can't pronounce, even though I like going to Oktoberfest. I don't speak that much German. And no, not going to happen. It's not on this stream. And they've just done a deal to accept crypto payments on their front-end platform, which will then either they'll do the exchange or pass the crypto on to like 13,000 restaurants in Germany. So if they just do the front end exchange and they're still doing a fiat conversion, etc., then that's fine. The other businesses don't see any impact to their business. If they pass it on, then great. They're creating more adoption. But that platform has sister platforms in Poland and the Czech Republic. So they're kind of starting it in Germany where they've got a good foothold, and now they're just going to keep expanding the offering. And not only that, they kind of kick the teeth in of for MasterCard payments. They get charged 5.5% for card payments. So they passed it on to the client. PayPal charges them 5% for the payment. So they also passed it on to the customer. They intentionally put Bitcoin as free, no charge. So people that have a little bit of cash, that have some Bitcoin, they want to pay for food and want to use it in that manner, they're seeing instantly their food's cheaper, the payment goes through just as quick. I think you're going to get to a point where having an individual wallet address for, you know, those one-off spends and not having to give up your credit card details is going to become more attractive to people, where you can have one address for that one payment, and then you just keep growing. You have a layer of security between you and the merchant, which is really, really attractive to a lot of people. And I think as more of those sites come on, that take the payment pressure or the adoption pressure off all the smaller vendors, I think that is really going to help.
One thing that's you may or may not be aware of, but there's another local, I guess you could call startup, they're called Travel by Bit.
Mm-hmm.
They just they just
I've seen
received funding from finance.
Wow, yeah.
They travel with crypto, but what
Yeah.
they've done, they secured the Brisbane airport. So it's only a domestic airport. I think they might have some international.
Yeah.
Airport where you can pay crypto.
I looked, I didn't see anything international. I was a bit disappointed.
Yeah, I think there's only a couple in international, but they've got around 300 odd merchants in Australia. It could be more, I'm not sure, but yeah.
I did see that one. They're using BNB coin for some hotels and stuff, right?
Yeah, well, obviously with Binance.
With Binance and stuff, yeah. No, that's a really, really good concept. And and again, even if, you know, if it's the front end merchants taking all of the crypto payment and conversion off the table first, then that's just another step closer. Samsung with their S10 coming out this year, end of the year or whatever, is going to have crypto wallets, hardware wallets. But
yeah, I think that's what newsletter.
By default, yeah. So it's because I saw the news in like November, they dismissed it saying, it's just a screenshot, or it's made up. We're not doing that. And then January comes around. So we're doing hardware secured wallets, and I don't know what chip they're using for that, but it's basically a ledger hardware on your phone, and that's going to open up usable, easy to. I mean, Samsungs are easy to use, sort of iPhones. They have to be, right? But it's going to be an easy to use payment service with crypto that's going to be in front of hundreds of millions of people, and it's going to be in every phone going forward from then. And then I give it 3 or 4 years like normal. Yeah, they're always 3 or 4 years behind Samsung, and I'm an Apple user because I have been forever now. But I'll probably switch. But
one thing that frustrates me is I've got an iPhone, and the Apple Pay, well, they block the chip, so only the banks that have
partnered
paying Apple, so that tells them to pay. Which what I want to see, and maybe Samsung does it, I don't know, is like an Apple Pay but for crypto, so you can just type and go. There's a few like swipe cards, like FPOS cards that link back to crypto accounts, but I mean, who wants to use that when you rather just touch and go with your phone?
Yeah, exactly. So I use the touch and go around the London Underground. So like I said, Starling and all the other ones, I will have that Apple Pay integrated, which is great. For Uber, for everything else, it's awesome. But maybe the Samsung doing it first with this hardware wallet. I don't even know what currency it is. It's only Ethereum or only Bitcoin. But it sets a precedent of moving forward that they're going to do a hardware layer security on a phone to hopefully get that tapping payments with crypto happening. And they have traditionally been first in that kind of field as well. First ones to do NFC. First ones to do two cameras and all that kind of stuff. So I think it's a good thing to happen, and it had to take a big brand moving forward first. Lots of little brands trying to break into the market doesn't make a massive impact. So I think it's a really, really good thing, and it might take time to come around, but it's a good thing.
Okay. Well, I think our viewers here are probably interested to know what the market sentiment is like. And how you're seeing how the market's reacted with the price of Bitcoin.
Yeah.
Going down. Trade volume or? Yeah,
well, we're actually doing a large number crunch over the new year. Being born on January 4th, it's a very lonely time of the year. Everyone's either skint or still hungover or back at work. So we did a lot of data analytics and number crunching during January. And there's a lot of volume that is related to price action. So when we see quite a large dip we see more buying action than going up. So people are definitely seeing value in downward trends. We only do the top 5 currencies. We don't do a huge list. So you have Bitcoin, Litecoin, Ethereum, Ripple, and Bcash. During November, we saw our largest volume when we had that huge downtrend. I think US in pounds, it was like from near £5,000 a token to around the £3,000 mark, and now we're down at kind of 2,600. So we do have, like yourself, we have those regular clients that come back and back, and some of them are operating businesses that get discounts from their upline suppliers using Bitcoin. So they come through us to deposit. A handful of them are withdrawing as well in fiat. We have a couple of traders that are moving certain stock in and out as well. And we've got a few different people that like the simplicity, that we're in the UK, that they can build and establish trust with us, that they're happy to try a few platforms, and they go, well, I get great service here, I get great prices here. They're still building the platform, developing it every single day, but there's no risk on the table of losing my funds. So that's what we're kind of getting a little bit of share, which is great. But the sentiment around it, I think, is still good. I think some people that are less engaged in the market feel like they had their hands slapped in the jar a little bit, and they're kind of just backing off a little bit. It's probably a good reason probably not a good thing when you see Tether being in like the top 6 or 7 position on coin market cap. So everyone has just sidestepped the market into Tether, and waiting for the bottom, or trying to bottom pick. But we still have a large clientele base that are buying every single day, either regularly, semi-regularly, or new people coming to the market because they're seeing a discount. They think it's extremely undervalued. And a lot of people are getting in before all this ETF America-backed circle rubbish. Yeah. Yeah.
It sounds similar to what we're seeing here as well. We're getting people that are buying because they're seeing the price low as well. And we've had people that created accounts a couple of months ago and they've decided the price is right for them to buy. And we also have the regular customers that, do their regular transactions. And we're also getting just new customers come in every day that are, either dabbling or putting in, larger sums. Overall, we're seeing the trend in our exchange increase. Just the general feel I get from, I guess, some of the crypto communities, it's definitely nowhere near as hot as what it was during the whole bull run, that's for sure. And I think probably some of the people have bought crypto at a higher price than buy it. Obviously it's not exciting for them anymore.
Yeah, and I think that's where a lot of the cooling off has come from. People, where it was, the sexiest thing of 2017 and 2018, and now that we're in a downtrend, people are like, "Oh, I'm not going to get involved anymore." And this is where I think some of the immaturity of the market is where we've got some older guys that are FX traders and property guys that are in our kind of groups, and they see these really, really young guys coming to YouTube to give trading advice, crypto trading advice to people and stuff like that, but like, they weren't around when the last crash happened. They were in primary school in 2008 when we had the big credit crunch and all that kind of stuff. And some of our trader guys, pardon?
Isn't everyone's an expert when the price is going up?
Exactly. And we've got this one guy, he's in his mid to late 50s, very, very big trader, puts some really good content there as well. And he buys just his digital assets through us, but he still mostly does property and FX. And he goes, I've been through 2 major crashes and I only made money off one of them. I make more money in a downward market than an upward market. I said, okay, cool, I understand that. He's done some really big famous stuff where he's able to be completely emotionless towards this kind of stuff, which makes him extremely profitable. And I think that's kind of what you need to be. You have to take a speculative approach right now. I think cryptos, compared to like the internet boom, it's like 1994 right now. You might have a crypto wallet, but you don't have anyone to send it to. Just like in 1994, you might have got an email address, but you had no one to send an email to. I think we'll go from 1994 to like 2015 extremely quickly. But right now it is a purist, speculatory kind of environment. And I think some businesses will thrive. I think it'll shake the tree and get rid of a lot of the junk ones, which is only better for the sector as a whole. But we're starting to see, even just in London, the UK, more events are more often happening now. Towards the end of last year, there was like 2 a month that I could get to, and I've done. What's today? Wednesday. I'm going to my third one this week, and I've got another one tomorrow night. So it's 4 in a week. So they are starting to pick up again, which is really, really good.
Okay. Yeah, I mean, I spoke to someone the other day. He said to me, he wanted to buy some Bitcoin earlier on, but his accountant told him not to. It's bad image, bad reputation. But his accountant also told him not to buy Apple shares when they're $15.
Yeah.
So he's like, well, yeah, I'm going to buy some. So I buy some Bitcoin now.
I suppose.
And he buys when he feels like he's going to vomit, and he sells when everyone's like excited. I guess similar to that Warren Buffett quote, where be fearful when everyone's greedy and greedy when everyone's fearful.
And right now, or around this time, depending where you want to bottom pick, this is the time to kind of be greedy. If I had some more free capital, then yeah, I'd be investing into a few different projects and tokens. They're all in kind of the top 20. I don't really get that excited about ICO stuff because I can't believe there's still new stuff coming to market, which is garbage. There are a few cool things here and there. Grin is something that's been put on my radar from a couple of friends of mine, specifically on one of our miners. That's kind of like secure payments, where I think after the block is mined, the source address is deleted or something like that. So it's truly anonymous payments. So that's interesting. The whole Nash exchange, the way they want to do their sharing revenue model in a regulated way. So if you hold the token, like say you get access to the capital moving up and down, you can't get any of the dividends unless you're in a country that you reside in that they have a license for. So they've got like Japan and parts of Asia and stuff like that. They don't have America and the UK, so you can hold the token, but you won't get any dividends, which is extremely fair. And as soon as they get that licked, I think that's going to set a precedent for a lot of other exchanges. So they're a really good one to kind of watch out and model. But I think generally people are starting to smarten up a little bit. That there's there are people out there that are just doing pumps to make money off and making new products that don't really need to exist. Something we mentioned just before the call, the whole Tron BitTorrent token ICO thing that went on earlier this week, sold out in 18 minutes, but nearly 30% of the supply was sold in the first 3 seconds, and people couldn't log in quicker than 3 seconds. So what's that about? Yeah, and it was run by two very, very well connected, very good marketing guys that probably don't need another token out there to ICO, but it was done anyway. And yeah, as soon as it was pumped, everything else was immediately dumped again. So it was just rinse and repeat of 2017, 2018 all over again. So I'm not really sure why people are still falling for it.
Yeah, I'm a bit surprised. I mean, we are seeing the market is maturing in some regards. Like they're getting smarter. I think a lot of people have gone burn ICOs.
Yeah.
In Australia, the regulation is relatively light when it comes to exchanges, but obviously the regulation's coming in place. They're trying to protect consumers. What we're seeing is there's been a few ICOs that have been run without the proper licensing or framework, and they're pretty much a security token. And ASIC, which is our government regulators, has come down hard on them, and they've shut down. So I think that's where they've kind of focused their attention at the moment.
Yeah.
And I mean, I guess that's where people are talking about security tokens. Is perhaps where the next evolution of cryptocurrency or trading is. Yeah.
And do you think just on that STO thing, because that is like the word on the street here in the UK and parts of Europe for that as well. There was the DX exchange that did the first one. They called it's kind of a security token, but they were buying baskets of shares of bigger companies and then tokenized it on their platform. So they bought 50, 100 grand worth of Tesla shares, and they put a token on top of it. So you're essentially creating a derivative product. But the first day, it wasn't hacked. There was a vulnerability. It was leaking out users' login tokens. So you can see every single person's login, log out traffic, which is not good. But then also, you log onto that kind of platform, you use that product. How do you know how many shares they own? And this day and age, you don't get a share certificate. You get, an email with a position against an ETF or something like that. It's quite difficult to actually hold the shares. So that whole platform is a bit spurious. And if you do create an STO on a business that has assets, or it's got cash flow, or it's got IP, or it's got whatever, and they're simply trying to create a more liquid market for an illiquid part of the business, who's the governing body of that country that says, yes, it's a real business. Yes, there are real people in it. Yes, there are assets in it. Yes, there's cash flow to pay the people back. How is that going to be legitimized and put on the blockchain publicly when you might not want all those details on there except for the people that are buying the token? So it becomes a very tricky thing. It sounds great in nature, but how do you make it legitimate and legal and put a framework on it? And then how do you keep some of that private?
I think there's going to be quite a few challenges with it. I mean, I've spoken to some people that are starting to do some investigation because they want to put some property that they've been developing into, pretty much create another liquid market. But I mean, realistically, from my perception of things, we're not going to see anything this year in Australia. Maybe next year, I don't know. I think the legal is obviously what is going to be the big roadblock to get that sorted out. I mean, I've heard of MDX, Multi-Digital Exchange. I think that's kind of what they're aiming to do, is to create a securities token exchange based out of Malta. So I don't know. I think maybe one of those countries where the government's a little bit further on with the regulation, they may come up with things, but as to how that ties back here, say in Australia or the UK, if you're trying to token out an asset there, how does that work? I don't know. There's a lot of questions I have.
And it's great that they're building some sort of exchange to suit that, that clientele. But can you put a UK business STO token on a Malta exchange? Is there a GDPR issue? Is there a privacy issue? Do they respect that it's a UK business and not a Malta business? Is it it's too big?
There's a lot of questions too.
There's a lot of questions. Where it's issued and where it's secured, that can be in the host country, but then that token can go anywhere, and that's probably okay. But there's still a long way for it to go. So I suppose my perception for 2018 or 2019, pardon me, 2019 is probably, I think it's going to be the year of the build. So there's going to be businesses coming up. There's going to be regulation that's going to be formatted, tax strategies that are going to be formatted. You're going to see people building out their platforms to be more secure, to have more offerings, to whatever. And then maybe 2020 is going to be the year that the retail market kind of comes back to the fold, when there's people that have survived, an 18-month bear market, where there's very little volume, or there was super amount of competition, and now it's kind of weakened a little bit, and only the real, the ones that have got a good product are going to really survive through it. Which I think is a really good thing for the industry, because when it was a bull market, massive bull run, there was, the 9-page PDF raising 15 million. You know what I mean? And they went from having, we're going to build it. We're going to have a team of 50 and an office, and we're not going to buy Lambos, and we've got like a 5-year runway to build the product. And then ETH started to go down. They go, okay, it's a 4-year runway. It's fine. We just build it in 4 years. Fine. Hire more people. It's a shit. That's a 1.5-year runway. ETH is now at $300. You know what I mean? And now some of these ICOs, to stay afloat, are day trading their ETH to try and make income.
Yeah, that's crazy.
Whereas then you've got the big players like who was it, EOS, where they raised $3 billion or something like that, something crazy. Took $1 billion of it straight away, cashed it out, maybe crashed the market. That's your own little research bit, and created an investment fund for incubating other projects. And that's one of the big events that's here in London, called SVK Crypto, which is backed by Block One. So they were very, very smart about it, and they're going to have an unlimited runway now because they have a proper business model and a proper fund behind them managing that network. But there's a lot of them that are going to just die out just from running out of cash.
Yeah, well, I've seen 2 exchanges that are launching or to be launched in Australia that did an ICO. They both raised money, and they were meant to be launched, I don't know, maybe 9 months ago or whatever, or some time ago, but they still haven't really got their product to market. So, I think people underestimate the amount of work that's required to get.
Oh yeah, definitely. Yeah. You've got an MVP and you've got a polished product, and you have to launch something to get out there. But at the same time, I suppose in the exchange space, which we're both very well versed in, having an exchange offering like ours, where you offer a buy and deliver, is extremely scalable. As soon as you want to get into the super competitive space where people are trading the tokens, and you've got more people using it, and the fees are obviously a lot less because you're just matching people. You don't want to launch a product that has an empty order book. You look at some of them launch. Like there was a really good one I was watching for a while, based on how it was built. Really, it was called the Ocean, I think it was called, or Digital Ocean, or one of the two. It was built on 0x, so it was a decentralized on a good protocol. I mean, it's a protocol for exchanges. They did it with a bit of source code that I looked at originally for our exchange, but chose not to use it. Was CCXT, I think it's called, and it's an open source. You can basically have like a trading platform out of the box, and you just have to, it gives you the framework and all the tool sets and stuff. You just have to, what pairs you're going to have, what protocol you're going to use. Do you want to build it in Python or Ruby or whatever? And then you can actually API into other exchanges to do some of the order book arbitration, which is really cool. But even now, it's been up for 6 to 8 months, and the liquidity is garbage. I mean, it's a great product and it's a great team. They raise money at ICO, but no one's using it. They're still on Binance or BitMEX or one of these other ones, but that have all the volume. And when you're a trader, that's where you go. You go for volume. So launching a brand new product in that space is, I wouldn't say near suicide, but you have to have either a pretty diehard following to use it that are going to go and trade. And in this market, people are not trading. They're either buying and holding, or they take small chunks and just increasing their token count. One of our clients goes between ETH and NEO so she can get more NEO. So every time it goes down a bit, she goes into ETH, uses our platform, and switches back and buys more ETH and goes back and forth between ETH and NEO so she can get her NEO holdings up.
Okay.
Yeah. But that's kind of what we're seeing. We're not seeing high heavy volume trading traffic, and something like Binance, but they're 80% down what they used to be.
Yeah. Well, I mean, the market's gone down from what it was a year ago.
Yeah, exactly. No, exactly. But yeah, so I think it's still a sprightly place to be. I think there's still plenty of innovation to be made, obviously. Money to be made from investing and trading and speculating, whatever. But I think if the bear market continues, it's just going to make sure that only the best businesses hang around, much like ours. So I think only good things can come from it, even if we don't see a bull run this year.
The comparison that you made before to the early tech of the 90s, I think is a good comparison.
Yeah.
So Amazon was trading, I think, at $85 in 1999. In 2001, it was down 80%, down at $5.97, I think.
Yeah.
So I mean, and look what Amazon shares are now. They're over $1,000. So
if you had
an opportunity to buy back then, you would.
Yeah. Well, he's the CEO of the one of the largest businesses in the world. Apple, Facebook, Netflix, etc. Well, he's about to not be the richest. I mean, his wife is probably the best investor in the world. Yeah, half. If you've ever seen the Eddie Murphy video, half your stuff. All jokes aside, I mean, he's built an incredible business from books, which has ridden literally every single wave of tech innovation. It was books, and then it was e-com, then it was like last mile delivery, then it was huge amount of automation, and then they got into the web hosting space. And I'm like, Amazon you buy stuff there. Why would I want to host stuff there? And now it's the staple. Everyone's either in Google or Azure, but mostly everyone's in AWS, just because they built the most scalable, interactive kind of platform. And like you say, in 1999 they were very cheap, and now it's insane what they're worth. Same with Facebook. That was around in 2006 it first came about, something like that, when it was brand new, and now it's how many billions? It's insane.
It's like Apple, I think, in 2006 launched their first iPhone, but it wasn't until I think 2011 that their stocks really took off, because it took that amount of time for the App Store or whatever to catch up.
To catch up.
Yeah, and I think that's where we are. Blockchain, it's the early internet. It's people start working out what is going to happen. Companies that build the groundwork and build a solid product that are here for 10, 15, 20, 30 years are the ones that you're going to see as the next companies. Yeah,
for sure. That's really cool. Well, I hope all of our viewers at getFIFO and your viewers with Digital Surge have gotten some value from this. I've had a lot of fun hanging out on a Wednesday morning. It's getting really cold in London at the moment. It's sunny outside, but trust me, it's not warm at all. It's like I think I'm
sweating at the moment, so that's the contrast.
it's half a degree and raining. It's not snowing, so it's just really freezing rain. But yeah, it's fun. I got some heating and a hoodie, so I'll live.
Well, thanks for your time, Jeff. It was good to do this.
Yeah.
Hope the viewers get some value out of this, and if so, we can look at doing another one.
Cool, excellent. Have a good day, guys, and I'll talk to you again real soon.
You too. See you later.